Good turnaround Tuesday, everybody. Let's have a great day. Fading dollar strength here, wrong over 620, get out of the way. Of course, I believe we have that parliamentary vote, perhaps a turn in euro. Starting to get a little bit of a candle when I break it down to the 5-minute chart. There is a possibility of a 1, a 2, and maybe one more shot down. But toe in the water in case it doesn't happen, and just heads up from now. So I'm looking for Tuesday to be a day where you get a potential euro turn. In fact, EG, I was looking for lower levels for longs, and right now it's looking like that may not happen. We're getting a nice reversal off this level right here, very close to a fib level, halfway back. Tested it here and didn't quite take it out here, getting a nice little pin bar here. So if we're going to get a turn in EG from here instead of from here, I would expect, if this is turning, that the euro begins to outperform cable going into this parliamentary vote. It's just a guess and high risk. So going with the lower beta, and the lower beta trade is just trading the Dixie here, thinking that this is not the low of the move. This does tell you, though, that the dollar, even if we do break back down towards weekly support, which looked like a layup once we broke down last week, but begrudgingly giving it back. So maybe all we do is take out last week's lows by half a point or so. There's major weekly moving averages, and we have fib levels back from here that could be tested. So just looking for one more shot down in the dollar. So even if the euro turns, I'm not extremely bullish, but I can make a case for back to here. 117, 1630 to 117 is what I'm looking for. That's still a big trade from here. So we'll see if we get the turn. We have an inside week. Coincidentally, Blake was talking about the 114 level. Well, here's your 2-week off numbers, 113.96. So you need to close above 13.96 to not have a 2-week reversal by Friday. Everyone cool? Everyone doing all right? Who hasn't signed up yet? Going, gone in 3 days. So take advantage of this. A lot of our current membership even took advantage of that. Shows you the character of the partnership behind ForexAnalytix. So it shows loyalty that, you know, we'll sacrifice revenue for our current members to get a good deal too. Try and find that on the net. Let me know. Also, got a nice tweet from one of our members yesterday. So if it could happen for Mr. Headley, it can happen for you. Just looking for it, Blake. Anyway, he was talking about he got his first pay it forward check yesterday. Mr. Headley, thank you for letting us know. Should be here in a minute. There you go. Richard Headley. Thank you, Richard. Going to pay it forward with its rebate money, which normally means helping out others, not just yourself. And this is how you do what Richard did. You just contact our sponsor, Trent, Justin, and they will, here you go. You do it here, Skype account, and here's Forest Park's website. And we also have a direct phone number, and they're going to pick up the line. You're not going to get phone prompts. So you have a couple of things to accomplish while we're waiting for the parliament, and that's to sign up, immerse yourself in the community. I teach Surround Yourself. We'll see, Ram Prasad. Time will tell. I teach Surround Yourself by Traders Better Than You. and I walked the talk almost 2 years ago when I joined the crew here. So I know I've grown as a trader, and that's after, decades of being in the game. So there's a lot of growth that can happen immersing yourself in our community. So we'll see what happens here. Euro's trying to pop a little bit. It's way overdue. And I think that we're going to get this one more push up in euro, one more push down in the dollar, and then maybe we could become dollar bulls again. I have an excellent guess. I think he has a very long-term bullish bias in the dollar. Mark Meadows, at Mark R. Meadows is actually the correct handle. I believe he mentors and teaches people at Top Step FX, which is a prop house. So, could be an informative interview for people that are looking for more capital to trade. Check out what their prop, a lot of these prop houses, you have to do your due diligence. Some of them are just, making a lot of money off you up front on the training. So we'll see. Looking forward to hearing Mark's views, and think we got to your level, Blake, last night in euro.
Yeah, we got really close. Hey,
buddy. Yeah, I got you.
So I had a bid at 114.09. We went as low as 114.12. However, I happened to be awake when it was just it was about an hour ago, and we were there, and I converted it and went long at 14. So I already actually went long the euro. My stop's at break even, and if I get stopped out, I get stopped out. It's this Brexit meaningful vote day in Parliament, so I'm not going to mess around. It's it's, hey, if I get lucky and we trade at 115 and it doesn't stop me out.
What are we going to have impact of that news? What time of day?
The guys in my office are saying it's going to be around 5 p.m. Eastern, roughly.
Okay.
Simon
after the S&P's close.
Yeah, right around when equities close. So U.S. equities. So I think it's going to be somewhere in that neighborhood. I mean, they start voting, and then by the time we get, I read yesterday it was like 2200 GMT. We should hear the results somewhere around there. So, things are going to be kind of choppy and very volatile today. So, just understand that moving forward. We do have economic data that we're going to get today. We're going to get producer prices, so that's good. It's might get a little activity from the U.S. data today. But yeah, I picked up some euro down here, and I'll feel a little bit more comfortable if it trades above 114.50. I might actually get stopped out here. Who knows? It was attempting to grind higher, but we'll see.
Yeah, it may want to check that low one more time. But you see on the last low, you got the 5 minute up there, right? The last low did not confirm. And you know what? If they retested that low again, you'd have your second divergence on a 5 minute TF.
And, what does that signal you to get long at that point?
Yeah. I mean, that's your second divergence. You have one. I'd like to see two, and for buys, I'd like to see the RSI reading over 30 on the second.
Got it. So if the RSI dip down here, but we hit lows, then that might be your signal.
That'd be a nice divergence. Yeah.
It was already diverging as we were heading lower, and that's why I'm like, I'll just pick it up here, and I.
Oh, it could go from here.
It could. Yeah. Like I said, we have to get above 114.50 for me to feel comfortable, and if I get stopped out, I get stopped out, and I'm not going to worry about it. Other than leaving some.
You ever really feel comfortable?
From
time to time. It's the exception, though, isn't it? Yeah. It's like an oxymoron to me.
I have to really see some major levels break in order for me to be comfortable.
Right.
Like for example, I happen to be short dollar yen, and my cost average is at 28. So I'm actually out of the money a little bit here. I've been making my way short since yesterday, so my cost average is right like
They
here.
really
So
juiced it yesterday, and the S&Ps and and yen have both given up a lot of the ground. I don't know what drove it yesterday night, or
just some China news,
Okay.
overnight, trying to support their economy. But like, for example, we'd have to get all the way below this, 107.50 for me to even feel remotely comfortable. You know what I mean? So, we'd have to be way down there before, it's 107.75, I know, but we'd have to be way down here for me to even feel remotely comfortable in that position. But whenever I trade, let me give you a little. I can use this opportunity to do a little mentoring for you guys and gals. When I get into a position, like for example, I am short the dollar yen. My stop is in. The reason why I put a stop in is for a couple of reasons. First reason is obviously account protection, because I'm trading pretty hefty size, so I can't be trading and then have an open stop and then get sideswiped by some volatile move and turn around and be down 100 grand. I can't afford to do that because of the way that I trade. It's like I'm not going to make 100 grand in a day. I have actually it as of last year, but it's not like that's an oddity. That is actually, and actually I'm exaggerating there. I made close to 100 grand one day last year, but it's not normal, and it's not even close to my norm. So I can't put myself in a situation where I get upside down so much money and then it's going to take me forever to dig myself out of it. So I have it for account preservation to protect myself. Second reason why is because my stop automatically in my head tells me what my risk and loss is, and it's already registered in my mind. So for example, if I let's give you an example of the euro dollar. So when I bought the euro dollar this morning at 114.40, okay, 114.14, excuse me, and I put my stop at 89 initially. My stop was down here. It was, I know the 618 was here. I put it well below the stop. In my mind, the stop being at 113.89 and my entry was at 114.14, I already calculated in my head exactly how much loss that was going to be, and I'm fine with it. So I can move on. I can move on to the next trade. I can go, all right, I'm risking X amount of dollars, a few $1,000 or whatever it is. I'm risking X amount of dollars, and then I can walk away and start looking for something else. If I don't have a stop in, then that looming risk of not knowing how much money I'm risking at any given time, it won't allow me to refocus and put my thinking cap on and start looking for other opportunities.
Tom Terrific.
What's that?
Tom Terrific.
Tom Terrific.
The thinking cap.
Oh,
I know you don't.
That's before my time. That was before my time.
Anyway, he had it looked like a funnel that he wore upside down, made out of metal, and every time he'd have an idea, smoke would come out the top. That was terrific.
Well, for me,
Google him, man. He's my hero.
I'll have to. Well, I guess I'll put my Tom Terrific on. But for me, it really, whenever I'm in a position or I establish a position, my stop has to go in for those two reasons. I need to protect, and I need to know how much money I'm risking. For me, it's like, am I risking 5 grand or 10 grand or 20 grand or whatever it is, or even if I get a really nice entry and I'm like, okay, I'm only risking a couple grand here, but I can make 50. So I know what my risk is, so I don't have to measure in my mind. Because the market's going to go sideways on you, and it can, and it happens quite frequently. You're in a trade, and all of a sudden, your trade goes cattywampus, and you're upside down, and oh my God, what just happened? Well, as long as you get stopped out, and you're like, okay, I lost, X amount of dollars. It was already pre-planned anyway. It's like, it's not a shocker to the system, that I took that loss. And that's really psychologically, that's very important for me to understand. I already knew that it was coming, that the potential was there, but to sit in a trade and then all of a sudden, you're just in a trade and next thing you know, you're down, $30,000 and you go, whoa, what just happened? And then you're trying to scramble out and you lose 40 grand, then it screws up your entire day and you're like, or your week, and you're like, oh man, how am I going to make that back? And now you're really put yourself in a disadvantage because now you can't refocus and find good opportunities. And then all these trades are going to come by you, and you're going to go, wow, I missed that trade and that trade because I was too focused on this losing trade that I was in. And, so those are the types of things the type of processes that I go through every day. I have to put in my stop immediately and go, okay, all right, there's my stop. At most, I'm risking X. And then whenever I say that to myself, at most I'm risking X, that's already registered in my mind that is my risk, and I can move along. I can say, okay, well, that's doable. All right, let's see if there's anything else out there. So anyway, just a little mentoring of how I go about the thought process of what I'm doing. So let's see here. Costa says, wonder what happened to the stops in the yen during the holidays, or remember when we got that big yen move? Yeah, I mean, that lack of liquidity, I mean, you could really get sideswiped in some of those positions. I mean, that had to have been a real shocker to the system, to a lot of people, because you were getting out 30, 50 or more pips below the market with your broker. But that's one of the risks of trading during thin holiday periods, is trading during situations like that. You got to be really, obviously, very careful, and the market showed us how risky it was. All right, so let's take a real quick look at some of these majors. And one last question I got from Guy says, on the euro dollar, you did, so wondering on the euro dollar, what? Oh, when do you move the stop loss to break even? Oh, he was wondering, it really depends. It doesn't, like today, I'm not giving it a lot of tolerance because of the situation today. It's not a normal day. This is Brexit Parliament vote day. So I'm like, I'm just not risking a whole lot. I move my stop to break even as quickly as possible. Sometimes, I could be sitting in a position for 2-3 days before I move my stop to break even. It really just depends on the position and what's happening, and kind of what the crosses are doing. And I look at a lot of different things too. I don't just look at, the euro dollar, for example. I mean, I'm looking at the S&P. I'm looking at, what's happening in gold, which, is very, obviously very strong parallel relationship to the euro, those types of things. So I pay attention to a lot of different things. It's not so cut and dry where you have to go, oh, I've been in the trade for 32 minutes and 42 seconds, so let's go ahead and move the stop to break even. It's nothing like that. I think you have to play it all by ear, and kind of depends on your entry and how well you manage your entry. Like I've managed to get in the euro right off the lows, and it still could hit the 618. I mean, realistically, I should probably move my stop to just below 114 just to give it a little bit more breathing room. But today is the day where I just don't want to mess around either. All right, so let's spend a little bit of time on the cable, or let's go to the cable. So the pound, it's coming back down to this 128 level. Now, remember, 128 was a pretty big breakout point, and we've held here. I think the risk is that we could trade around this area for a while today. I think we could, break below the 128. We can, kind of be in and around these levels. I think the algos are very keen to stopping you out. So if you're long the cable right now and you got your stops below 128 because you're like, oh, well, this is a big, here, this is a big breakout point. So, I'm going to put my stops below that. I think you're, the risk is just you end up getting stopped out because, like I said, the algos are going to push it around. They're going to probably stop anybody out below this 128.25. That's why I'm not too confident about my euro. My euro is probably just going to get stopped out. But like I said, I'm willing to take the risk. But you might get below here, stop some people out, and then before it bounces. And just remember, you got to. The vote is a reactionary type of event. I mean, you can try to roll the dice and hope you're right, but I think that like to have any meaningful directional trade with the cable at this point, you got to wait for the outcome and see how the market reacts to the outcome. That would be my 2 cents here as far as the pound goes. So the pound is trading around the 128 level. Also realize that we did fail the 618 retracement that was right here at 128.70. So that's something else to think about. We do have a downsloping trend line that comes in around 130. I've been in the camp, and I continue to be in the camp, that if we do break above 130, it's going to be extremely bullish. So whatever happens today, let's say, whoops, I didn't want to do that. Let's say that the vote is rejected. Okay, and your natural inclination of a rejected Brexit deal by the Parliament is going to be, it's a short, or it's a sell. I think there are situations, and I don't know what they are right off the top of my head, that the pound could turn bullish. Maybe it is, the stipulations that the Parliament put on Theresa May, or, some amendments they wanted to make that seem, like that might be doable. I don't know. But whatever the case is, I think today, if the pound trades above 130, technically, regardless of what your opinion is, because this is where opinions, quite frankly, become like belly buttons, where they don't matter so much. I think if we get above 130 and we get a solid break of 130, it's bullish. Now, while we're trading below 130, I'm a little skeptical about being long the cable in the same. I might as well just put that out there as well. So this is really my bull bear line in the sand, I guess, is the way to kind of look at it, is just 130. While we're below 130, be careful. We get above 130, things get bullish, and things probably get a little squeezy. And hey, look, I'm going to be the first one to tell you, I hope we break 130. Not because I'm a dollar bear, not because I'm a dollar, or a cable bear. I'm more looking for volatility, and I think that the pound above 130 is going to squeeze. So that's all I really care about. I think if we get above 130, we could very easily test 133 and 134, maybe even higher than that in the coming week, which would be awesome. Now, it would draw probably the euro back up to 114, 115. Or excuse me, 115, 116. I mean, there's a lot of knock-on effects, if you will, with the cable above 130. I think it'd provide general dollar weakness to a certain extent. But anyway, that's what I hope. Doesn't mean it's going to happen. I just hope that the outcome today is, the pound just starts ripping, and we can start playing the squeeze, because everybody knows that the market is extremely short the cable. So a squeeze type of move would be create the most volatility and create the most opportunity for all of us, in my opinion. The Aussie, stagnant, not really doing anything here. The Kiwi, we were in this like ascending wedge that we're trying to break down. We did manage to make one final new high. Relative strength is divergent. So we're coming off a little bit there. In the New Zealand dollar, dollar Canadian's kind of just sitting there. I think with crude oil a little stronger today, it's keeping a lid on the dollar Canadian going up. The dollar yen, which I am short, I don't mind being short as long as we have a daily close below 109. I'm actually surprised with stocks as weak as they are that the dollar yen isn't a little weaker at this moment, but that doesn't mean it won't. But I do believe that if we get below 108 in the dollar yen, that should expose, 107.50 and possibly start making our way lower. Morgan Stanley is actually targeting 94 yen, I think, which I thought was really interesting. One of the things I should point out, which I am a very big believer, these spikes that you see in very illiquid times, when it doesn't happen in full periods of liquidity, I feel that we'll revisit this at some point. These spikes, they're kind of predictive in nature when they happen in low periods of liquidity. Now, that's just my
94. Wow.
Yeah, I know. I mean, that's a pretty.
That's a huge bullish bond bet too, probably.
Yeah, I mean, you think
And
about
risk
that.
off, and
Yeah. I mean, that's down here.
Yeah,
which
they just said sometime in 2019.
Yeah, I mean, that's not like today or tomorrow. So just keep that.
Well,
in
you
mind.
never know. Look at New Year's Eve.
Hey, but look how stocks are acting. Let's point that out too. I mean, S&Ps. We actually hit 2,600 again last night. I think that while we're below 2,650, 2,670, I think the market's bearish. I mean, I know we're tagging the upper end of this resistance zone, but I don't think stocks are bullish right now. You know what I mean? Yeah. So, and I think that it's only a matter of time before we get another leg lower. And then on top of that, you got this shutdown that's dragging on. And I mean,
Did you hear Peter's interview yesterday? He talked a little bit about that. Peter Butler.
No, I didn't.
That it's not going to be. You can't recapture the money lost in the economy. Just people that would have been spending, it does have an effect on the economy, all these people not spending, and it doesn't create a lot of confidence.
Yeah.
Does it inspire you to want to go out and buy another house?
No. And it doesn't. And
but you did anyway. You're the ultimate contrarian.
Well, I had to move. I had to get out of here.
I hear you. There are other reasons besides, whether you think it's a great time to buy a house. It's not only price, is it?
No. But it will slow down the market, I'm sure. But anyway, we do have I'll stick around with you guys through producer prices. They'll be up here in a moment. We have producer prices and Empire State Manufacturing, which look like they are getting released today. I think they're getting released this morning, right at
the Bureau of Very Few Statistics.
Yes, exactly. Let's see here. Let me grab my Bloomberg really fast so you guys can. Here, this is it coming up. Okay, so it looks like we have data coming out. Bloomberg's got it as well. So we'll just kind of watch the market. In the meantime, I'll bring in Stelios and Steve. Hey guys, are you here?
Good morning, everybody. Good morning, Blake.
Hey, hello.
Good morning. Good morning, guys. How you doing?
Good.
Very well.
Good with a question mark?
men with very little words. That's great.
Hey, they've been talking to Velu. I mean, not talking with Velu.
Imagine if we had Velu here, yeah.
For those of you that don't know, Velu is one of our, he does a lot of stuff behind the scenes, processes our videos, does a lot of our social media, the stuff that, he really handles all that. And he is not a man of many words. If we can get 2 words out of him consecutively at one time, it's pretty impressive.
He is a textbook Finnish person. A lot of substance, very few words.
He's a really nice guy, though. That's
you make up for it, Steve.
Yeah. Steve's got
Coach, you and I make up for a lot of people.
10 times over, man.
Very
all
good.
right, so hey, we got the data coming out in literally 15 seconds here, so stand by. Let's see. Everybody's going to be looking at these numbers really carefully because we're missing so many numbers as of late. Let's see. Here they come. Empire State came in a little weaker.
Here they come, maybe.
Maybe.
PPI,
Wow, they're weak.
Yeah, weak.
Weak.
Yep, that should prove dollar negative.
It is. Yep. Weak. So yeah, we got some weak data all the way around. Not a huge dollar reaction though. I mean, the dollar yen slipped a little bit, but not a huge reaction. But
core PPI, especially quite a big miss. I mean, from expected 0.2 positive minus 0.1 negative.
Yeah,
that is.
All right.
Well, the Fed covers, right?
Yeah, New York Empire State Manufacturing also planned. I mean, from 10.75, previous was 10.9 to 3.9. That's like less than 1/3 of what was expected.
Yeah.
Not less, but roughly 1/3, yeah.
So, Steve, I flipped you over to the charts, and guys and gals, thanks for hanging out with me today. And make sure that, remember, this is your last week to get involved with ForexAnalytix at these prices. So if you want to join us in the community, join us in the chat rooms, this is your last chance. So for months, so many months probably. So thanks, guys. Have a great one, and I'll look forward to. I'll see the rest of you guys in the chat room. Thanks, everybody.
Bye, Blake. Thank you, mate.
Bye.
Thank you, Blake.
Speaking of which, I forgot to show yesterday. We have a new little widget that's been added to the toolbar, for ForexAnalytix clients in case they didn't notice. It has, the major markets and their trading hours, so you can have a fast glimpse of what markets are open and which ones are closed, or whenever they open, and the trading hours. Everything is displayed in your local time. So here's the local time in Athens that I am, but it's going to be displayed in your local time from the system. So this is a little nice widget that we added on Sunday. And
the flags, don't forget to tell them about the flags. They turn.
Yeah, the flags are gray when the market is closed, and they become colored when the market is on, so you can immediately have a look at it. If you mouse over, you'll also see the important markets that are trading there, like for example here US, S&P, DJI, Nasdaq, Russell, etc. Okay,
how much have we spent on website development since the beginning of ForexAnalytix? About 200 grand or so.
Too much.
More than that.
Okay.
More than that, and we keep spending. Yeah.
Yeah. Well, that's it's a statement.
Oh yeah, we want to keep improving the product. There's no question about it. I mean, we're not standing still, right?
Yeah, not at all. I'm an old man. I can't keep up with you guys anymore. So what do you think, Steve? Nothing till Are you just going to be sitting on your hands?
First of all, as you see, we got some weak US data. Despite that, yes, we saw a little sell-off in the dollar, but so far nothing major, nothing to write home about.
Good point.
So before I start on the charts, and we have actually the last few days we had very active people on the webinar asking a lot of questions, which is a nice thing. You can always write in the chat the questions, and I'm going to go over them. Stelio, did you have any insight for us before I go over the charts?
Not really. I mean, Blake talked about the UK elections with all the uncertainty that comes with it. The other thing he did mention, and I found it quite interesting actually, is the China signaling. They signaled more stimulus. And what caught my eye actually is that the state planner, whoever it is that said it, they said that China, a quote, China will aim to achieve a good start in the first quarter for the economy. And then they said they're going to be proactive with the fiscal policy, and the monetary policy is going to be prudent, and then they want to ease funding for small and private firms. But what stuck to me is this thing where they said we want to achieve a good start in the first quarter for the economy. And it seems that, central banks, this is something I don't think you would ever hear 20 years ago. This is so short term, so focused. So, central banks, they have a mandate usually, inflation, employment, whatever it is. And, they take steps with a horizon of 6 to 12 months forward, and because that's how slowly things change, right? So it just scares me a little bit to see how in depth they go now, and how they try to influence even the tiniest little things. We know a lot of central banks look at equity markets, which really they shouldn't because it's not their mandate, but they do. And they, some central banks like the Bank of Japan, they go in, or the SNB, and they buy equities directly.
Yeah, I don't really agree with you. I agree, but I disagree. In what sense? The economy now is all about asset prices. That's a problem, Stelio. I mean, we've.
Yeah, but his point is, Steve, that these statements that are being made, it sounds more like a hedge fund manager would say that than a central bank.
But that's a problem. It is. The last two expansions were purely based. The last one, at least, even intentionally. I mean, Bernanke more or less had admitted so, in inflating values of assets. So since they intentionally are doing this, it makes sense. And since the economy's expansion is almost solely based on the wealth effect now, which is completely unhealthy. I mean, I agree 1000% with that. It makes sense that they will be paying attention to what happens in the stock markets, because this is the only thing that keeps the music playing. Because then it becomes a game of musical chairs. You understand what I mean? Once the music stops playing, there's where the problems begin. So yeah, that's the problem. This is purely a monetary based economic global system, and sooner or later this is going to be over. There's no question about it. But until that happens, once they've gone down that road, there are only two paths from there. One, admitting what's happening and finally take a proper stance, which is going to mean that things are going to implode in the short term, and there's going to be a lot of pain, but perhaps then we can start having again some proper economies. Or two, just take it all the way and see where it leads, and knowing that the political system is always pushing towards the direction of kicking the can down the road and making the problems somebody else's issue a little bit down the future. That's what's happening once again here. So it's not really a big surprise. The situation is really scary. Let's see when it blows up. But until then, our job as traders is to trade what we see, because fundamentals are one thing, and it's a good thing to keep an eye on, especially when it involves your personal decisions, in the long run. But until then, we just trade what we see and trade the markets that we have.
That can must have a lot of dents in it.
Oh, for sure.
That we've been kicking for about 40 years.
There's no question about it. There's no question about it. But every time it becomes even tougher kicking it down the road, right? And it's also extremely unethical, because kicking it down the road means pushing the problems to future generations, making the problems bigger, but pushing the bigger problems to future generations. That's why it's completely unethical. Anyhow, back to the chart. So, very special day for the pound. There's no question about it. And not accidentally, the pound, the cable is at a very key area at the moment. As you see on a daily closing basis, it has been unable to penetrate through the 61.8 of the last move lower, despite both today and yesterday trying and being intraday above it. I'm also monitoring this ascending channel, so it's going to be quite important to see after the end of today if we're going to actually close above or below this key area. If we do close above, I think that this opens the door Blake said it correctly. There is another confluence of resistances at 130, but I'm also monitoring this descending channel, which is a little bit higher, and confluences with a 200 daily moving average. So in essence, another confluence of resistances currently passing roughly from 130, 110. So, you know the key levels ahead. And I totally agree with Blake. I think that if we start breaking through those levels, the extreme short positioning in the market is going to act like gasoline in the fire, and has the potential of really, really squeezing the market a lot higher than here. So the path of least resistance remains lower unless something happens and the cable starts pushing through these levels, in which case, as I said, the extreme positioning can really start triggering stop losses and then put in motion a chain reaction that can actually push the pair easily up to 133. So risk reward favors being short here, but if you decide to do that, make sure that you're flexible, make sure that you understand that you wouldn't want to see a daily close above, for example, yesterday's high, because then the game changes completely. Okay. Now, having to do with the rest of the pound pairs, and I'm going to start, from there, since we know how important, the day is for the pound. I see a rebound here in the pound yen, which looks to me corrective. Worst case scenario, would expect that it can push through once again towards 143, but I would expect it to fail from there. Not that I would be surprised if it failed, straight away from here, right? Because this is the 50% fib, as you see. 2 days we tested it. So there is the potential that we're going to fail from here. There is also the potential, if we squeeze, that we can squeeze all the way up to 143 before making it lower. Here as well, the risk-reward ratio favors short positions, as long as we hold below the high of the day. So, I think it makes sense. Now, let's have a look at the pound Aussie and the pound Kiwi. Pound Aussie, nice recovery the last couple of days, but still remains below this broken channel. So I think there is the potential for more downside from here, once again towards the 176 level. Now, if we do make it above the 179.30, then I think we're headed higher. But until then, the situation is more flexible. Now, on the pound Kiwi, on the other hand, the move lower looks quite a lot more corrective. So, if I had to solely judge by pound Kiwi does look more bullish. You can see the move to the downside as an ABC. Of course, it can prove to be something more complex, but I do think that, if I had to trade one of them to the upside and the other one to the downside, which I wouldn't do, but, the pound Kiwi looks a lot better to the upside than the pound Aussie at the moment. Speaking of which, let's have a look at the Aussie Kiwi, because I just remembered that yesterday we had a question which I didn't have the time to cover. The question was, what's happening with the Aussie Kiwi here? And what's happening with the Aussie Kiwi here is that, we've seen the Aussie Kiwi break below a very significant long-term triangle. And so far, the move higher looks more or less corrected to me. So I would remain patient here. I think that there is the potential of, seeing more choppy price action, but I do think that the path of least resistance remains to the downside, but we just might need a little bit more time to consolidate the recent losses before actually resuming to the downside. So, I just wanted to cover that because yesterday there was a late question that came in and there was not enough time. You already had Peter's interview starting. Now, March hike, yes or no for the Fed? Glenn, it depends. It's too early to say. It's going to be very heavily dependent on what happens to the markets until then and what happens to the data. Personally, I'm leaning towards no. I believe there is a chance that we're not going to have any more hikes. So, if I had to make a bet today that you're asking, I would say that there is a good chance that we're not going to have a hike in March. A very good chance, in my opinion. Yeah, Costa, exactly what you're saying. If we can get a couple of generations ahead, who cares? Yes, that's exactly what they're thinking. my view for the Dow Jones, US 30, let's have a look at it. There it is. Okay, so my view here is the following: 24,250, a little bit higher, perhaps 24,500 previous triangles support that can now turn resistance is going to be a very hard level for the market to crack. So, you know, we might easily make it up to there, but I would be very, very careful being long up there, because I think the 50 daily moving average is also in between those two levels. So I would be very, very careful. I think that we should see some kind of a bearish reaction from there, which means that there is no risk reward buying where we currently are. I would feel a lot better selling, you know, the closer we get to those levels than being long, you know, for a move up there. Although in the short term, it looks like we're consolidating. So I really can't, you know, exclude the possibility of another push to the upside. Stelio, can you please write to Velu that there's no sound in YouTube? We just had somebody say. Okay, yes, thank you very much. We might push all the way up to there, but it's not that far away. I mean, it's like 300 to 600 handles, which, you know, for the Dow Jones is not that much. It's, what is it, a maximum of, let's say, a couple of percentage points to that area. But I would really consider it a very good opportunity to be short, even for a short-term reaction back down towards 23,300. So that's where I think the opportunity lies in the Dow Jones. The same deal more or less with the Nasdaq. I mean, I'm monitoring this descending trend line and this horizontal support resistance area. Both of them are a little bit higher. And I'm guessing a couple of percentage points as well. I think we might see a little bit more strength, but I would be very, very cautious up there, because I think that we might see a move to the downside. The same deal applies here with the S&P. S&P so far finding it very hard to crack through the 2600 area, which is, you know, to be expected. Now, having said that, I wouldn't be surprised seeing that, on the other hand, we're failing to break down lower. I wouldn't be surprised to see another push to the upside here, but then I would consider this confluence of resistances at 2630 to be quite a tough one to crack. So perhaps all the indices, all the US indices, will push higher once again, you know, for 1-2%, and then fail from there. So as I said, I think that the next opportunity is going to be to the downside, and then we can assess what kind of a move that is, and, you know, then we can have a better opinion of if there is more upside to follow after a reaction, or if we've actually seen a medium-term high, and then we should be looking for a lot more weakness, perhaps a push to new lows. Let me see. Questions, Euro USD. Yeah, I'm going to have a look at the Euro USD. Was wondering what happened to the stops in JPY paid during the holidays. Never seen difference trading. Okay, question on this Brexit volatility. Expected thoughts maybe on how Euro pound. Yeah, let's have a look at both of them. And let me say here the following. First of all, about Euro USD, as I was saying, you know, several days ago, as long as we remain above 114.50 on a daily closing basis, there is the potential for more upside. Now, having said that, I said it yesterday, seeing the price action in USD Swiss, which is more or less inversely correlated to Euro USD, I have to say that I like how the USD Swiss is trading. I like the fact that we found a low in this ascending trend line support and this channel's support. So I think that a move above 98.80, 99 cents is going to bring a lot, is going to produce a lot more upside for the USD Swiss. So that would also point to more weakness in the Euro pound. So if I wanted to have some exposure, I would probably go for being long the USD Swiss once we get a confirmation that that level is breaking out. Now, having to do with the Euro pound has broken below the 89.50 area, and I said that, I said when that happens, that this area is now, changing and it's a level of resistance. And the next downside area of support is the 88.50. We almost made it yesterday and today. So far today, we're seeing consolidation. I think simply that the market is waiting to see what the pound is going to do. But as long as we remain below 87.50 and 88.50, there's nothing to do. Now, once we see a breakout from either of those two zones, I think that there's going to be some follow through. Okay, so nothing to do within these 100 pips, but I think that a break higher or lower from there is going to produce, some bigger reaction. So I think then it might be worth trading the breakout. Until then, personally, I wouldn't be looking to get exposed to it. Could you please have a look at copper? Absolutely. Let's have a look at the metals, at the metal complex in general. But before we do that, let's have a look at crude because I didn't have time to do it yesterday, if I remember right. So let's go down to a 4-hour chart in crude because I wanted to show what I drew last week, that perhaps we're going to see a pullback towards this area, 49.50, before we see more upside. We still haven't seen that. So perhaps, now that we've already moved lower, perhaps we need to see another leg to the downside and then a bigger recovery. Bottom line, I would still be looking for more upside, perhaps from, if we don't find support here at 49.50, I would be looking towards 47.50, and then I would be looking for more strength in the crude market. Okay, so I think that another push to the downside is probably going to be a good buying opportunity for one more push higher. I don't think that crude is ready to resume its path lower yet. I think that there is a bigger rebound coming initially. So I don't have any exposure more in the crude. It made my quarter being long. On average, I made, because I closed my position in three different areas, I made a little bit more than 10% of my account in profit there, and I would gladly gain more exposure if I see that one more push to the downside. Okay, so I'm going to start scaling in. Probably between 49.50 and 47.50, I'm going to start scaling in, being long crude again, unless I see some kind of a move that's, very strong, very impulsive. But if the move to the downside, continues in an orderly fashion, I'm going to start scaling in. Now, let's go to the metals because you initially asked about the metals. Let's go to the 4-hour chart in both of the metals. So this is gold. Now, this looks like being a textbook triangle in gold, which makes me think that the path of least resistance remains to the upside. But if we do see a push to the upside, and especially ideally, I would want to see in that case a move to the 161.8% extension of the triangle's width. That would be roughly at 1310, 1312. I would be very cautious up there because I think that there is a good possibility that that's going to be some kind of final thrust higher before we see at least a bigger correction lower, if not, a continuation to the downside. And as you see, technically speaking, the same thing applies to silver. Silver is consolidating in probably a bullish manner here, and I think a push towards 16. Dollars, which is the 61.8% fib of the last move lower, or even 1620, which, as you see, is a quite strong area, previous area of support, then resistance. It can prove to be an area of resistance once again. Perhaps it's also a fib extension. Let's have an extension of the triangle and see what we find up there. So let's extensions. Yeah, as you see, the 161.8% extension is at 1610. So I would want to see a final thrust towards that level before looking for more weakness. So, perhaps another push to the upside before seeing more weakness. Now, copper, because you started by asking for copper. Copper, is not resuming to the downside. It made quite a nice recovery here, and I have to admit that the last 4 or 5 days of price action don't look bearish to me. So I wouldn't be surprised if I saw another push towards the 272 area to retest that area. I'm still holding. I have taken profits on half of my short. I have the other half. I've trailed my stop loss to break even. There is a good chance that I'm probably going to get kicked out from the market at break even by seeing the price action here, but you never know. So, since I have a good entry, I'm holding the other half. Perhaps we do see that push lower towards 244, but, it seems to me that we might first need to see more strength before lower. There is even, if you want to be bullish, if somebody wants to look at copper, through a bullish set of eyes, you can even make the case that a push towards the 272 area would probably form some kind of an inverted head and shoulders formation, in which case that area would become the neckline. The 200 daily moving average is also there. So that would be then a key level, which if we broke to the upside, would trigger some bigger recovery for copper. So, those are the two scenarios in copper. I'm still in wait and see mode. I already have exposure, but as I said, I don't have any risk anymore on the table. So I have the comfort of monitoring, from a safe position. Now, having to do with palladium, that would be a nice level for palladium to fail up here at the 161.8% extension of this whole corrective move lower. Unfortunately, the last 5 days of price action seem to be another bullish consolidation. So I have to admit that the most likely scenario seeing this price action is another push to the upside, perhaps towards this ascending channel of resistance, before finally seeing some kind of a proper corrective move, hopefully towards 1,140. That would be an ideal target. Okay, so palladium, I think we're going to see some weakness sooner rather than later, but it doesn't seem to be ready to to do something like that yet. Platinum, as I've said multiple times, it remains one of the weakest metals. So if you want to really be bearish the metals, probably platinum remains the best option to express your bearishness. Okay, now having to do, and coach, you remember that very well. If you remember, last time we changed the drawing on this chart on the gold-silver ratio, we were almost down here, and I drew that we might, rebound somewhat from here before seeing a push towards 80, towards this ascending trend line support. We've so far seen this rebound, but on the other hand, I have to say that this rebound is not disappointing in my point of view, but because so far it looks corrective, while the previous move lower in the gold-silver ratio looks impulsive. So I would expect that the gold-silver ratio will produce more weakness, at least in the short term. Now, of course, the 80 area is going to be key. We might then find support from here and continue this consolidation within this larger ascending wedge, because nobody can say for sure when we're finally breaking down below it. But when we do, I think there's going to be a big follow through as long as we make it below this trend line. Okay, so I think this is going to be a massive opportunity, and at some point, we will have the ability to trade it, but nobody can exactly predict when. Now, USD yen, I remain of the opinion that I had yesterday. Even if we see more strength from here, I would expect a failure and another push to the downside. And if we go to the DXY, I have to say that the DXY on the daily chart, this looks easily like a corrective move that can produce more strength. But now if you go to the 4-hour chart, so if you are a shorter term trader and you have a look at the shorter term picture here, you're going to see the same channel, but you're also going to see that the rebound so far within this channel doesn't look impulsive. What I'm trying to say here is that I wouldn't be surprised if we fail in the vicinity of 96 roughly, 96, 96.10, 96.20, and then see another push to the downside before seeing a big recovery. So perhaps there is more choppy trading, there is more short-term weakness before perhaps seeing more strength from there. Okay. Now let me see if I missed any questions. Coach, do we have an interview today?
Yes, partner. Mark Meadows of Top Step FX at Mark R. Meadows.
Okay, perfect. So probably from what I understand from the handle, it's he's going to talk about effects, right?
Yeah, he's gonna be covering his thoughts on cable, euro pound, a lot of things cable.
Speaking about the cable, by the way, the bearish scenario in the short term, in the short term chart, which is the 4-hour chart for me, is this one that you see here. Some type of a wedge, the failure here from 129. So, if you're looking for weakness, I think that confirmation will be a break below this confluence of supports at 127.80, 127.90. So that's going to be your cue for more weakness. If we do break this area on the 4-hour chart, I think it's more than clear that we might then see some follow through to the downside. Okay. Okay, if your guest is here, we're exactly at the top of the hour. I think I covered all the questions. I even covered the couple that we had yesterday and that I didn't have the time.
No one does it better. No one does it better, Mr. Volge.
Thank you, Coach. Thank you. So enjoy the interview, and we'll be back here tomorrow. And of course, we'll be in the chat room.
Yeah, I'm looking forward to talking to Mark today. Mark, how are you? I'm now going to make you the presenter. Looking forward to having a conversation about what's on every FX trader's mind right now, and that's a vote we'll get around the NYSE close. Hello, Mark.
Hey, Dale, how are you?
Great. Thank you so much for coming into our community today. I know you're a part of a Top Step FX community, and it's great to have like-minded people around you when you're doing this, isn't it?
Yeah, definitely. It's hard enough to do on your own, so you got to find someone in a group and a community to support you. So so happy to be on.
Okay, well, I'd like to take you back to how you got in the business and how it started for you. Maybe what you were doing before then, and who was responsible or what event led you into this arena. I usually say, who do you blame for it? But I'm not gonna.
No, for sure. So so my passion for markets started when I was in college, and I was taking a international business or something class, and
where'd you go to school?
American University in DC.
Oh wow, great school. Okay.
And so a currency trader came in and gave a speech, and from the point that he started talking, I was hooked. And so I just kind of delved deeper and deeper into the rabbit hole. I got a grant to do a study on the feasibility of a North American common currency, and then sat for a day with a currency trader while I was working on that project. And it was the day of the bombings on the trains in Madrid, I believe. Like this, we're talking back in 2005, 2004.
Yeah.
The
age of pre-ISIS.
Right. Yeah.
Yeah. Okay.
And he had a Bloomberg terminal up, and he was like, okay, you're going to see, dollar Swissy move up to here, and then or move down to here rather, and then bounce back up, and you're going to see this and that. And like, he was just spot on, a former Goldman guy, just really, really bright. And so after that, I stayed in touch with him, and when I was graduating, was fortuitous enough to be coincided with a point where he was looking to expand his desk. So I traded with him for 2 years, and then around the 2008 period, got into financial news and spent some time looking at economic data right out of the government reporting. So got a whole sense of how that all worked.
Were you on Goldman's desk for a few years with him, or he had his own company?
No, he had his own company. Yeah.
Okay.
Yeah,
I'm also curious before we move on, what an interesting thesis or grant that you got. I'm curious about your conclusion that you came up with that study?
Yeah, so just to set the stage a little bit, this was during the height when I got this during the height of euro strength. So the euro was looking like a sort of this resounding success. Yeah, up. I think at that point just below 130, but yeah, I mean it was all-time highs at that point, and everyone was thinking how brilliant it was, and when I did the report, what you do is look at the economies of Canada and the U.S. and Mexico, and Mexico still is really a developing / emerging economy, and so it just seemed politically infeasible when you have two developed economies, with different sort of standards of living, et cetera, and then one that was doing really still up and coming. So I think you see that a lot now as the European Union has expanded to less developed economies. You're seeing some of those tensions rise.
Or over debt-laden economies. So they couldn't have foresaw Greece. People said back then the reason the people that were not proponents said it couldn't work with just a monetary union. It had to be a fiscal union to manage it. That is something that we're seeing. The weakness in Spain and Greece and Italy now and France. It seems like the whole thing's blown up, but you know what? Let's get to what everyone cares about. So what do you do to either make money or preserve capital on a day like this? I'm interested in, you work with prop traders. What's the insight or advice that you're giving people on what could be a pretty big red event around the NYSE close? Do you stand aside on days like this and react to the reaction, or is there enough technically for you to have a toe in the water?
Yeah, so personally, what we do here at Top Step FX is, anyone can join our program, go through an evaluation, and then we actually fund them with our trading capital, and have risk parameters around how they should trade, and those risk parameters are things, Dale, I'm sure you have for yourself, things like a weekly loss limit, sometimes a daily loss limit, those type of things to say, hey, the most important thing you can do is trade for tomorrow. So personally,
to trade another day.
Exactly. So personally, I'm scarred trading the pound because I was caught in I was caught long the pound in the flash crash in November 2016, I think. And at the time I had an account, and 2 minutes later I had $16,000 less in my account for no apparent reason. So I'm really scarred by that. Today I will not be trading the pound, particularly as we see there's some interesting dynamics going on in the market. Like it seems pretty clear that the market is expecting Prime Minister May to lose the vote this afternoon. And yet when we look at the pound, and let me bring it up here on my chart. I think
Mark, it's interesting. Sometimes you have to be scarred to know whether or not you have the will to get off the canvas and do it all again. And it won't happen again. Yeah, and sometimes we have to have an auto wreck to know how to avoid accidents. And I think it's something that everyone gets caught in something. It's what you do with it. You either get in a fetal position or you assess it and you think about how it happened and you avoid the same mistake. So I doubt you'll ever make a mistake like that again. Did you have stops in when that happened?
I did, but it didn't matter. The pound went from, I think I was in at 121 or 122, somewhere in that area. And I think the low tick on the chart was like 113, and I was able to get out.
You.
No, I think I got filled at like 115 or 16 or something. But those, those weren't really prices. Like, like they didn't. The market didn't actually trade there. And so, it was just a very frustrating, painful experience. And fortunately for me, I didn't have, too much size on where, losing 5-6 cents in a couple minutes could, wipe out or bankrupt, my account. So
you ever notice that you have too much on when you're wrong and not enough when you're right?
That's right. It's
all in our heads.
Yeah.
So you started with EG, and I think that could actually be a kind of a good way to play this pound. It seems like everyone's pretty sanguine, and the bulls are making a case for 131, but I was looking at possibly looking to buy euro pound around 88.20. I see you trade pretty naked here. No indicators, just looks like pivot points, supply demand areas, or technical levels. What are you using there, Mark?
Yeah, so on these charts, in particular, with what's happening today, with the pound, I don't want to get too complicated on the charts. I really do want to just see, hey, what are those support and resistance points? So the two green lines that I have here are kind of like what I would consider like an area of consolidation. We're seeing this is a 4-hour, or this is a daily chart,
right?
The 4-hour chart. So we're just seeing the price continue to be, drawn to this area. Excuse me. So that's kind of just like there, and then we obviously have the high that was put in over the past few months, and then excuse me, Dale.
It's okay, buddy.
I am a week into recovering from a small cold, so
okay.
Sorry.
Better than pneumonia.
That's right. Oh, for sure. So we had those highs around 91, and then the lows at down below at 86.71. So I would say if you're looking to buy, and I think you mentioned 88.30 or 88.20.
Yeah.
I think that could be a level that is hit. And actually, I kind of agree with you that there is some risk to the pound to both sides. I would kind of view it more as a risk to the upside, and the reason I would think that is, this news that Prime Minister May is going to lose this vote. It seems to be baked into the market, but the pound really hasn't. Particularly as the chatter has, sort of increased over the past couple of days, the pound hasn't, sold off at all. It's kind of just treading water. So what that would tell me is, even if she loses, it seems to be the market's paying attention to that margin of victory, or margin of
interesting.
Okay. Yeah. So, and I've read a number of things that suggest that if she loses by anywhere from 0, well, I guess you can't lose by 0, 1 to 70 votes, let's say, there's a chance that she'll make sort of cosmetic tweaks and then get the bill through on the next time. Kind of like, and what it reminded me of was, when TARP was defeated in the U.S. Congress, how they, the market reacted, they made some minor tweaks and then came back and passed it. So it seems like, if the margin of victory is anywhere where she can kind of, make those minor tweaks and then force people to vote for it, so they get their political win of saying they voted against it and, whatever, gave her more bargaining chips. So that may be a big win for the pound. Okay. And if we switch over to the sterling chart here, have just some lines of support underneath, and then this larger descending, lower high, lower high, lower high, all the way, going back months and months, right, since the pound put in its highs early last year. So that would be the area that I would really look for prices to target. I know one of your earlier guests mentioned, getting above 130 he thought would be bullish. I'd actually be a little more cautious on that and look towards that 130.60 level, you know, as an opportunity to either sell or buy a break of that trend line as we move into tomorrow.
Okay. I've noticed from some of the reactions I've seen from you in my stream on Twitter that you have a pretty, and correct me if I'm wrong, pretty bullish view of the dollar. Am I reading you correctly that that's your macro view, and you look at every dip that the dollar takes as potentially an opportunity to position yourself back on the long side of the dollar?
Yeah, definitely. And you know, I've been that way since mid last year. I gotta say that last week's move in the euro above 115 kind of, you know, caused me to re-examine that sentiment. But I came down on the side of still, you know, I believe that Europe is heading for recession, and I don't share the same belief about the United States.
Okay.
So I think, you know, all in all, when there's still this huge demand for dollars out there.
What do you think is behind it? Just denominated debt, dollar denominated debt? Could it be that it's still the petrocurrency, reserve currency? You know, what is the, you know, fundamental behind the demand for dollars that you see?
I think it is the dollar denominated debt. And, you know, for emerging
From
markets.
like okay, there you go. Okay, all right.
And there it's excuse me. It's really this catch-22, because the stronger the dollar gets, the more it actually harms those economies, and the more they need dollars. And then the stronger the dollar gets, the more you know, so it's really this sort of, you know, bad chain reaction that happens. And until those, you know, global equity markets sort of stabilize in emerging markets, you know, I think that would be one of the impetuses behind me sort of switching to a neutral dollar or bearish dollar view, is if those emerging market equities, you know, start to stabilize and bounce.
Okay. How about price structure wise on the Dixie? You know, 96 was a big area, and, you know, we keep challenging it. Dollar gave up, it looked like a major breakdown, but, you know, we're testing it again. I can make a case for maybe 94-ish, 94 and a half. What would price wise turn you bearish a dollar based upon the dollar index?
Yeah, so, you know, I don't pay a ton of attention to the dollar index.
Okay.
Just to be fair, you know, euro, I use that kind of as a proxy, as it's what 65% of what happens in that index. So if I bring up a chart here of the euro, what I really look to see, and one of the patterns that, you know, it almost scares me how clear this pattern is, you know, just looks like a standard head and shoulders here, right? And I thought we were going to break down here last, you know, August, ended up holding on, coming across, and then thought for sure we broke down early November, and Eurodollar found some support. So what I would, you know, I used to have my levels, you know, for a breakdown sort of alongside these highs right here, and at like 140.
So many traps
Yeah.
for, you know, a lot of people. And, you know, you don't hear it anymore, do you? I mean, there was such a drumbeat for parity in the euro. I'm not hearing it anymore.
Yeah,
Are you?
I'm not, but I think, you know, my target for Eurodollar is down here, and I know these bars aren't super big right now, but right in that 108 to 109, and that's the gap where the French election.
Yeah.
Yep.
Okay.
And so that's my intermediate term target. I think if it picks up steam, the theory kind of behind the head and shoulders is if it breaks that neckline, then it's going to target a price level equidistant between the head, the top of the head, and the neckline. And so that would actually put, if it does break there, that would actually put the target, right at that like 103, 104 level. So it could certainly, gain some momentum. Whether we'll get there, I don't know. Things would probably have to get pretty bad in terms of the European economy, in my view.
Okay.
But I don't rule it out. I think, you have and one of the things that kind of helps me, solidify my view is actually listening to people like your earlier guest who, are a little less, are bearish dollars or, not bullish. So, I think there are a lot of people out there still to jump on the bullish dollar bandwagon, that there's enough, price to go.
Do you do anything with the commodity currencies, Mark? We had that big drop in oil and finally got that reaction in the loonie.
Yeah.
So I'd be interested in what your views would be. We had that flash crash in Aussie and the yen on New Year's. Probably gave you goosebumps, reminded you of something.
Yeah.
You have a bias or a view on, say, Aussie?
Yeah, so I was actually short Aussie dollar right up at like 72.15 heading into the weekend.
Yeah.
Because I was thinking I was taking 20, 30 points of risk right there to the recent highs. And then one of the things I like to do, Dale, is someone once told me amateur traders try and buy weakness and sell strength. And what really good traders do is buy strength and sell weakness. And so when I saw, Euro's 70 points lower from where it went into the weekend, and Aussie's 15 points lower. And so I do think, we could be at this intermediate term top in Aussie where it's a really good, risk to reward. But I think if I'm jumping on that long dollar train, Aussie relatively has been strong, and I'm not sure that's the best way to express that opinion.
Okay, so do you trade any of the outside markets like gold, silver, crude indexes, or strictly FX where you're at?
Yeah, no, I love this move higher in gold. I think is really bullish. So I love that. I'd be looking to, and that's kind of part of this dichotomy of like, being bullish dollar, yet, looking at that move in gold and saying, hey, there's something there, there's something behind it. So
yeah, it did it without the dollar.
Yeah.
It did it without a weak dollar, really.
Yeah, and I don't know your view on this, so maybe you'd share, but when you see two things, that are highly correlated and then they break down, to me that tells me either, gold is going substantially higher or this is some sort of false breakout. And it doesn't seem like a false breakout. So I would look to buy gold maybe, $5-10 lower for a move above 1,300.
Okay. How about now taking the time to, tell us what you do at Top Step FX, and are you what I would call a mentor in a trading room to guide your newer or your prop traders through the landmines of FX trading? Is that your role over there at your company?
Yeah, so what we do, like you said, we have proprietary traders that we fund with our capital. And the way we find them is, we just have an open evaluation. The valuation does, cost anywhere from $125 to $275. But, in terms of really developing, and gosh, I paid more than that for my Forex education via live account. So, it's a simulated account, and what it does is, put some risk parameters, kind of like I mentioned earlier. So you have a weekly loss limit, and you have a profit target, and you have a minimum number of trades that you have to do. And then once you kind of meet that profit target without breaking any of those rules, we give you live capital. And we have 100% of the risk, so that, say you were caught in a flash crash, that's all our money. There's no joint capital contribution like some prop firms do, where the first loss is your loss. So it's a really good opportunity. And what I do over here is kind of some of the analysis and market analysis, and just kind of like look at it and talk with folks, tell their stories, find out about how did they get into trading, and just kind of share that in the community, in a sense of, we don't have an online trading room, but it's kind of just via email and our blog, just sharing those stories of saying, what we're here to do is really help anyone trade better. And so, kind of maximize their own potential and journey and stuff like that. So it's a really good opportunity for those that are, kind of new and or struggling, who are looking for, hey, what's the right strategy to use in these markets? Or, hey, I have some, behavioral things to work out before I, put my money at risk again. So I'm gonna, trade.
And you guys have a lot of good podcasts. You interview a lot of traders as well, don't you? Kind of like similar to what we're doing right now. Yeah,
for sure. So the podcast is called Limit Up. Dale has been a guest on. We've had, Jack Schwager, Blair Hall, some of the other of the market wizards, Dr. Brett Steenbarger. So a lot of folks you'd recognize the names.
What's the one thing you remember? What's the most important thing you learned from Jack Schwager? Because I've interviewed Jack, I don't know, 3 times or so, and I come away with one important piece of advice from him. What was yours? What did you get from that?
So personally, what I would say is that the trading style that will make you the most money is the trading style that fits with your personality.
Bingo. So he says that. He says that a lot. He said, "Find a trading style that suits your personality." So, what if you're a Gemini and schizophrenic? Would you have both trade a 5-minute chart and a monthly chart at the same time?
I don't know. I'd have to interview a successful Gemini schizophrenic.
Anyway, so I really appreciate you coming on, Mark. Anything? The best way for people to get a hold of you would be your Twitter handle.
Yeah, Twitter handle's Mark R. Meadows, or my email is mark@topstepfx.com. So happy to talk markets or shoot you thoughts or interact with you on Twitter. So thanks.
Okay, well, I wish you and all your mentees that pips rained down on you guys in 2019. It was really great having a chance to turn the tables on you and interview you, Mark, and really say hi to Danny for me. And okay. I wish you all the success in the world, my trading warrior brother.
All right. Thanks so much, Dale.
You're very welcome. Okay, everyone, that's a wrap for Turnaround Tuesday. Good hunting the rest of the day. And remember, don't just count your pips, count your blessings. There'll be a lot of action in private member chat around the NYSE close to see what the market reaction is to the parliamentary vote. Remember, don't play roulette and bet on a reaction, react to the reaction. Adios, everyone. You're very welcome, Hami. See you, Tom, Babak, Konstantinos. Adios.